The stock market has entered a dangerous period, especially for investors looking to put new money to work. However, there's always a deal to be had. And in today's video, we're going to take a look at 4 dividend-paying stocks that I believe are a great buy in the month of May. We did, however, start the year with 3 consecutive months of S&P 500 gains, one of the best first quarters we have seen in a number of years. However, April got off to a little bit more of a rough start. We got a little bit of a pullback, but we have bounced off those lows. So is that something that's going to continue, or is there more pressure ahead? After all, the saying that's out there is sell in May and go away. But is that necessarily true? This usually pertains to investors taking a bit of a break. Summer months tend to be lower volume months for the stock market, but May generally sets the tone for the full year. Since 1982, years with a positive May performance saw positive trends continuing for the rest of the year, roughly 90% of the time, with an average increase at the end of the year of 13%. Only 3 years has that trend been bucked. So let's hope for the upside to continue. And before we begin, do me a huge favor. Click that like button down below. Subscribe to the channel as I truly appreciate it. And it really helps with the growth of the channel moving forward. And let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, taking a look at 4 dividend-paying stocks for you to consider buying in the month of May. Beginning with dividend stock number 1, which is Visa. Stock ticker V. Visa, as you know, is a financial company, one of the top credit card processors in the world. It is a global company. Not really known for their dividend, but they are well known for their strong dividend growth. The company offers a unique blend of growth potential outside of the dividend, but when we look at the dividend, very strong dividend growth. Currently, the company has a market cap of $551 billion, and over the past 12 months, the stock is up 20%. As long as the economy and the consumer continue to hold up, which has been the case, and delinquencies do not shoot up, Visa is going to continue to excel. We see it all the time. More and more people are moving away from cash and to credit card swipes. This is evidenced by Visa's results, where you see volumes increasing year in and year out. In terms of the dividend, the company currently pays a dividend of $2.08 per share, which yields only about 0.76%. However, here's that dividend growth. The company has a 5-year dividend growth rate of 16%, and they've been growing their dividend for 15 consecutive years. The dividend is plenty safe, as Visa has a low free cash flow payout ratio of just 23%. So the dividend is great, but how does valuation stack up? Well, analysts over the next 12 months expect the company to generate $9.93 in terms of earnings per share. Their 3-year average growth rate moving forward is about 13%, giving the company a forward PE multiple of 27.6 times, which compares very favorably to the company's 5-year historical average of 32 times. This is a company that has nearly seen their EPS double in the past 4 years. Now let's take a look at what analysts think, as they currently rate the stock a strong buy, with an average 12-month price target of $310 per share, implying 13% upside from current levels. And that brings us to dividend stock number 2, which is McDonald's Corporation, stock ticker MCD. I really like McDonald's stock at these current levels. However, let me give you a bit of a warning. The company is expected, I should say, to issue earnings shortly after the release of this video. So I'm going to be paying a close attention, and you as an investor might want to wait to see how those come out first before buying, because if the results are okay and we get a dip in the stock, this is definitely a name I will be adding to. The company currently has a market cap of $197 billion, and over the past 12 months, they are down 6%. But when you think of McDonald's, you think of Big Macs and fries, but really, in reality, McDonald's is more equivalent to a real estate company. The large majority of their restaurants are owned by franchisees. They own McDonald's Corporation, the building, and the land, and collect rent from those franchise owners. It's actually a great business model. And that business model generates a lot of free cash flow to pay a growing dividend. Speaking of that dividend, the company currently pays an annual dividend of $6.68 per share, which yields about 2.5%. The company has a 5-year dividend growth rate of 8%, and they have more than 40 consecutive years of dividend growth. And that dividend is plenty safe, as McDonald's has a free cash flow payout ratio of 67%. So how does valuation look? Well, with the stock down nearly 10% just year to date, it actually looks quite good. Analysts are looking for the company to generate 2024 EPS of $12.40 per share. They have a 3-year average growth rate moving forward of about 7%, giving the company a forward PE multiple of 22.0 times. That compares favorably to their 5-year historical average of 26.7 times. The company has more than doubled its EPS since 2020. Now let's take a look at what analysts think, where analysts currently rate the stock a buy with a 12-month average price target of $323 per share, implying 18% upside from current levels. And that leads us to dividend stock number 3, which is United Health Group, stock ticker UNH. UNH is one of the largest companies here in the US, and they're the largest stock within the Dow Jones Industrial. So to say it carries some weight is an understatement. For shareholders of UNH, 2024 has been a bit of a roller coaster, as they've heard about increasing costs as well as a cyber attack that hit relatively at the same exact time. However, after releasing its latest earnings report, which put aside some of those fears around cost, the stock has regained some of those troubled times it's come across. The company currently trades with a market cap of $457 billion, and over the past 12 months, the stock is only up about 2.5%. However, year to date, they are sitting at a negative 6% position. Like Visa, UNH is also known as a dividend compounder, as these are both companies that have been able to generate strong amounts of free cash flow, which allows them to grow their dividend at a very strong clip. Speaking of that dividend, the company currently pays an annual dividend of $7.52 per share, which generates a yield of 1.5%. However, here's the dividend growth. The company has a 5-year dividend growth rate of 16%, and they've been growing that dividend for 14 consecutive years. The dividend is also plenty safe, as the company has a free cash flow payout ratio below 40%. So we're talking about a company with a safe dividend, strong free cash flows, and a strong dividend growth rate that's expected to continue moving forward. Now let's take a look to see if valuation makes sense. Analysts currently are expecting 2024 EPS of $27.75 per share. They have a 3-year growth rate moving forward of about 12%. The company has a forward PE multiple of 17.8 times, which compares favorably to their 5-year historical average of 21.9 times. Now let's take a look at analysts' expectations, where they rate the stock a strong buy, with a 12-month average price target of $591, implying 19% upside from current levels, the highest of the 4 stocks we'll be looking at today. And that leads us to the 4th dividend stock on our list today, which is HP Inc., stock ticker HPQ. HP operates out of the technology sector, and this is a company that has come across some struggles, as PC demand was reduced a ton over the past 12 months. However, a lot of analysts and what we've been hearing from management teams is they believe that cycle has bottomed, and we are going to be reverting back to PC demand increasing. We just saw that in the Microsoft results. So this is another way to play that rebound in PC demand. The company currently has a market cap of $27 billion. So again, this is the smallest company on our list today. And over the past 12 months, the stock is down 3%. And on top of that, the stock is trading about 20% off its highs set last year. So again, if you are a believer in that PC demand and the AI PC growth that'll be coming and moving forward here, this is one stock you might want to take a second look at. And when it comes to the dividend, unlike Visa and UNH, which have lower dividend yields and strong dividend growth, HP has a high dividend yield and strong dividend growth. So it's kind of hitting on both ends of the spectrum there as of late. The company currently pays a dividend of $1.10 per share, giving it a yield of 3.9%, right on the verge of a 4% dividend yield. And over the past 5 years, they have a 5-year dividend growth rate of 12% and 13 years of dividend growth. In terms of safety, the company has a free cash flow payout ratio of 35%, making this dividend plenty safe at the moment. So we get a high dividend and a growing dividend. So what about valuation? Where analysts are expecting 2024 EPS of $3.45 per share, a 3-year growth rate moving forward of 6%. This is a company much slower in growth, so it is expected that we're going to get lower multiples. So over the past 5 years, for comparable purposes, the stock generally trades at about 8 times. Right now, on a forward basis, it trades right in line with that, 8 times. But again, we are expecting a little bit more in terms of growth, that rebound in PCs and the introduction of AI PCs, which could make this stock look a little intriguing. Let's take a look at what analysts think, where they currently rate the stock a hold with a 12-month price target of $31 per share, implying 11% upside from current levels to go along with that near 4% dividend yield. So there we just looked at 4 stocks for you to consider buying in the month of May. All of them look to be trading at intriguing valuations. All of them pay growing dividends and safe, reliable dividends at the moment. Down in the comments section below, let me know which of these 4 stocks do you like the best? Would you consider buying the most here in the month of May? And if you haven't done so, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.